for example, seeds, companies like Monsanto that sell seeds to farmers, genetically modified seeds that resist some of the diseases and droughts that have become a problem for farmers all over the world. So I think the CSX call also bodes well for agricultural. Another broad area that I would mention very briefly is technology. We've heard from a number of tech companies. Google, IBM are just two of the big names that I'm sure everybody's heard about. What we did see in technology is that while most of these companies have beat on the earnings line, some of them have beaten revenue expectations by a large margin, others by a smaller margin. But what we are beginning to see in technology is real revenue growth, and this is a good sign. However, a lot of that growth is really coming from operations outside the United States. Let's take the Google report as an example. Google showed growth in their core search business. In other words, people going to their website and clicking, and companies actually pay to be placed well on that search engine. Most of that growth, or a lot of that growth, was actually coming from outside the United States. Yes, U.S. click search revenues grew, but the strongest growth came from outside the United States. I think that's going to be a key theme that's going to continue for years going forward. The U.S. consumer does have some major headwinds in front of them. One is very high unemployment rates still in the United States. The other, of course, is that they're still in a cycle of deleveraging. They're trying to pay down debt. They're trying to save more money after a long period of dissaving or even having a negative saving rate at times. The U.S. consumer is not going to be that engine of world growth that it has been over the last 20 years. But what we're seeing that is picking up some of that growth slack is really foreign markets. And if you look at it, most of your U.S. companies have been moving more and more of their operations abroad, generating more and more revenue abroad compared to what they did, say, 10 years ago. And that's a very good sign that that's where they see the growth is. So a couple of takeaways. One, we are seeing evidence, real evidence, of a cyclical recovery in the U.S. economy. We're seeing that in freight volumes. We're also seeing that in companies in technology and other industries showing actual revenue growth in the United States. Two, the coal market, very interesting market, but if you want to play coal, focus on companies with exposure to international coal, not U.S. coal. And three, going forward, and this doesn't mean just focusing on investing in foreign companies, but also in U.S. companies that have major foreign sources of revenue and profits. A lot of the growth that we're seeing so far in major U.S. companies, S&P 500 companies, is not coming from the United States, but it's coming from international markets. They're going to be the source of most of the revenue growth we see in coming years. Thank you very much.